Financial reboot coming? The U.S. financial system is undergoing seismic changes. Antitrust rulings, a dovish Federal Reserve, deregulation that hands Wall Street a powerful gift, and fintech challengers making bold plays. All of these are converging at the same time. Today, we'll unpack these stories, connecting the dots to reveal a broader trend. Are we seeing the start of a U.S. financial reboot that could reshape markets, banks, and investors for years to come? Antitrust Shockwave, Google's escape. Alphabet, Google's parent company, just scored a major legal victory. Regulators had pushed for a forced breakup, most dramatically an attempt to strip Chrome from Google's empire. But the courts ruled otherwise, allowing Google to keep Chrome while imposing restrictions to ensure fair competition. Tech stocks surged on the news, with Alphabet shares rallying strongly. The key here isn't just the win for Google, it's what this means for big tech. After years of scrutiny, this ruling suggests regulators are walking a fine line, keeping companies in check without dismantling them. We'll dive into why this matters for investors, how it reshapes the tech landscape, and what it signals about the balance of power between government and Silicon Valley. Dovish Fed and the bond market ripple. The Federal Reserve is again in the spotlight. Soft job data and dovish remarks from Fed officials have sparked speculation that rate cuts could come as early as this month. Treasury yields fell sharply in response, reviving the bond rally narrative. For investors, this means two things. Savers relying on fixed incomes may see shrinking returns, while borrowers could benefit from easier credit conditions. We'll explain how dovish Fed signals ripple through every corner of the economy, from mortgage rates and consumer loans to stock valuations and currency markets. And we'll compare today's Fed stance to past pivots in 2008, 2020, and 2023 to ask whether the central bank is preparing another massive liquidity injection into markets. Banking deregulation, Wall Street's jackpot. Under President Trump's second term, regulators have rolled back many of the post-2008 safeguards that were designed to prevent another financial crisis. The Volcker Rule has been weakened, capital requirements eased, and oversight reduced. Banks like J.P. Morgan and Goldman Sachs are celebrating, with share prices climbing as private capital rivals lose ground. This deregulation is a double-edged sword. On one hand, it allows banks to lend more freely, boosting profits and potentially fueling economic growth. On the other hand, it risks repeating the mistakes of the pre-2008 era, where unchecked risk-taking led to collapse. We'll explore both sides, the opportunities for growth and innovation, and the dangers of sowing the seeds of another crisis. Fintech Rebel, Revolut's buyback move. In the middle of all this turbulence, fintech giant Revolut has made a bold move. It announced a tender offer to buy back up to 10% of its shares, a rare step for a fast-growing fintech. This signals confidence in its future, even as broader markets wobble. Revolut's strategy stands in sharp contrast to traditional banks, showing that fintech isn't just about innovation. It's about reshaping capital markets themselves. We'll examine what this buyback means for fintech as an industry, how it ties into crypto adoption, and whether Revolut is setting itself up as the model for the next generation of financial institutions. The bigger picture, a U.S. financial reboot? Put these stories together and a bigger theme emerges. Antitrust rulings are shaping the balance of power in tech. The Fed is signaling a shift that could unlock new liquidity. Banks are regaining power through deregulation. And fintech rebels are rewriting the rules of the game. This isn't just business as usual. It's a potential reboot of the U.S. financial system. But every reboot carries risk. The risk of new monopolies, asset bubbles, regulatory blind spots, and consumer fallout. We'll explore whether this is a controlled reset that will strengthen the system, or a reckless experiment that could destabilize it. Opportunities and risks. This moment in financial history is one of high stakes. Investors face a landscape where tech giants are emboldened. Wall Street is freer than it has been in years. Fintech is innovating at full speed, and the Fed is hinting at looser policy. For some, this means opportunity, rising stock prices, booming innovation, and cheaper credit. For others, it means danger, monopolistic dominance, systemic risk, and inflationary pressures. The question isn't whether the U.S. financial system is changing, it's whether you're ready to adapt to it. History shows that those who prepare for disruption can thrive, while those who ignore the signs often get left behind. If this deep dive helped you understand today's seismic financial shifts, hit like and subscribe for more urgent market analysis. Drop your thoughts in the comments. Do you think deregulation will fuel another crisis? Is Revolut the future of banking? And will the Fed's dovish turn spark another bubble? Or save the economy? Your perspective matters, and tomorrow's headlines could make this debate even more urgent. This is Felix. See you next time.